And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld taking you through to that closing bell with a global simulcast that starts now. Carol Massar, Tim Stenovec, they join us from the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. A slew of big earnings, Carol Massar, coming after the bell tonight, including from IBM and Tesla.
Yeah, big earnings, right? And they're just going to get fast and furious over the next couple of weeks here. Having said that, we talked with Sam Stovall, and he reminded us we're in the 64th quarter. It looks like out of the last 66 that earnings have surpassed estimates, but it's also revenue growth. Revenue growth is surpassing estimates. So is profit margin. So far, so good. But let's remind everybody, we got some big ones coming at us.
Yeah, Carol also saying, and I think fairly during that we need to kind of maybe think about differently how we do estimates if we're exceeding estimates so frequently and
consistently.
Consistently. We're being managed pretty well.
Yeah, absolutely. I mean, that's sort of the game, right? The management talks to the sell-side analysts, and they sort of figure out where things are going to land. Though I will say, we were just talking with Savita Subramanian. She made the point that yes, beat rates are very high right now, 85%, but so too is the bar that you're seeing a lot of post-earnings disappointment in shares.
Yeah, and I just wanted to, we talk about Tesla, and this kind of feeds into the AI trade. I know it's a car company. I know we're going to talk about EVs and the sales they get from that, but a lot of investors are looking ahead to this idea of an autonomous future, a robotics future, and that ties into the AI trade. And a lot of questions as to just whether Tesla is actually part of that or behind.
Yeah, well, we'll see if we get any updates, whether that somehow gets put into that earnings release, Romaine.
Absolutely. Well, Tesla is slightly lower here on the day by about 0.9%. Right across the screen for all of the major indices and averages in the U.S., including the Dow Jones Industrial Average down 0.7%. The S&P 500, the benchmark, down 0.5%. The NASDAQ indices, the composite and the 100, each down by roughly about 1%. And your biggest laggards today, you're going to find that in the more cyclical and small cap space. Mid caps down 1.2%. The Russell 2000 small caps, Carol, down 1.5.
All right, back to the big caps I go. The S&P 500, guys, most names, no surprise, lower in today's session after we've seen the major indices under pressure. 302 to the downside. Katie, 199, gaining ground to unchanged.
Well, let's take a look at the sectors, how they performed today. You did have 4 sectors manage to finish in the green, 7 in the red. You can see that the tech sector was down, and that's certainly taking a bite out of things. But in terms of what did do well, energy outperforming, up 1.3% as a sector. Consumer staples, healthcare, real estate also managing to finish in the green. But it's going to be hard to actually see the benchmark go green when you have tech weighing on things like that.
Yeah, right. Big pressure, lots of pressure. Having said that, Intuitive Surgical, definitely an outperformer, guys. Top in the S&P and NASDAQ. The robotic surgery company, you know them well, finishing the day just shy of a 14% gain. The company did boost its worldwide Da Vinci procedure growth forecast for the year.
Oh, so, I used one of those once.
I know.
Yeah.
We're so glad.
I mean, I didn't personally use it, but
well,
it was used on me.
Yeah, and I guess it went well.
It did. I'm still here.
We're so happy.
You know, the doctors
Thank you, Dr. Tawari. He's great, if you're watching.
The doctors wear goggles to use these. I was actually having a conversation with a surgeon last night who uses this machine, and he made the point that it actually hasn't changed much since he began using it over the last 10 years. It's remained relatively consistent with what it can do, and sort of, yes, it's gotten smaller a little bit, but it hasn't actually changed that much.
Sounds like a great dinner.
Yeah, we had burgers.
Okay.
Wow.
Well,
Okay.
all I'm going to say, great gainer, guys.
You go to dinner with me, you talk about stocks that are moving. That's what happens.
Cool.
All right, outperformance, but still the stock only up about, not even quite 1% for year to date here.
Now, when he said burgers, did he mean like a veggie burger?
We did chicken.
Burger?
We did
Chicken
chicken.
burger.
Yeah.
Oh, gosh.
Oh, my God. It always comes back to food when it's Tim. Always, always. Hey, Hilton, I just want to mention, Hilton Worldwide up about 3.2%. Also, a top gainer, I think, earlier in the session in the S&P. The company boosted its annual adjusted EBITDA forecast and the low end of its net unit growth outlook for the year. So some optimism there. And I was going to say Beyond Meat, but don't judge me. It was up 112% earlier in the session, guys, but actually finishing the day down 0.9%, but it's been on
Wait, what?
fire.
That was the range today?
Yes.
It was,
no, it was down 27% at its lows today. So talk about
that was like the widest. I was taking the widest range we've seen on that stock, at least since 2022. And on a percentage basis, I mean, what we've seen this week, basically the widest since it's been a public company.
But it's still up, right? Like, oh no, it's down.
It's down, Carol Massar,
4.6% for the year. I was going there.
All right, it's memeing.
Yeah. No, yeah.
All right, I'm going to talk about some non-meme stocks. Let's talk about Netflix, down 10% today. Biggest decline going back to April of 2022. This after we learned about a tax dispute with Brazil cutting into third quarter earnings and
Hey, I'm
also
going to
raised
interrupt you
growth
here.
concerns. Go
Tesla
ahead.
earnings crossing the wire right now. Let's get right to it here. My apologies, Tim. Adjusted EPS in the most recent quarter for Tesla coming in at 50 cents a share. The street on average was looking for 54 cents. Revenue did come in above estimates, though, at $28.1 billion. So a beat on the revenue side, a slight miss on the EPS side. For cash flow, well above what the street was looking for, $3.99 billion in free cash flow. Now, the estimate based on Bloomberg reporting is 1.25. So that's almost 4 times what the street was expecting. We'll have to dive a little bit deeper into that. Gross margin, a slight beat at 18% here, and operating income coming in relatively in line with estimates, 1.62. Street was looking for 1.65.
Yeah, and you can see that the stock is kind of deciding what to do with this information. As you mentioned, of course, a big miss when it comes to adjusted EPS, but that free cash flow certainly is an eye-popping figure here when you take a look at it, being 46% higher year over year and more than double the estimate. Shares down just a little bit after hours. The volatility on this stock has been pretty incredible as well, up 100% since April's lows, but still only about 8% higher for the year.
Yeah, worth repeating that third quarter free cash flow number, $3.99 billion, massively exceeding estimates of $1.25 billion. Third quarter adjusted earnings per share of 50 cents. The estimate was 54 cents. Third quarter operating income, $1.62 billion. Estimates for $1.65 billion. Shares, though, still moving lower in the after hours, down about 1.5%.
Yeah, I mean, let's remind everybody. I mean, the stock has been on quite a tear. We've seen a bounce back off of its lows, and so some concerns when it comes to the valuations that we've seen compared with some of the other Mag 7. I mean, this is a company, Romaine, with a forward PE of almost 251. So, investors want to see some outperformance or get an idea of revenue growth going forward.
Yeah, they talk. I'm just going through the investor statement here, and they talk a lot, not so much about the vehicles, but the idea of new products and looking to launch new products. Of course, they do flag some of the updates to the Model 3 and Model Y, but of course, a lot of talk about their other businesses, of course, in the hardware business, in the energy storage business, and of course, when it comes to robotics and automation.
And we are going to continue to keep an eye on Tesla. Let me just quickly break in and talk about Lam Research. These results coming out, adjusted EPS for the first quarter actually beating estimates here. Adjusted EPS coming in at $1.26. The estimate had been for $1.22. So a beat there on adjusted EPS. Also beating on revenue as well, coming in the first quarter, $5.32 billion. The estimate had been for $5.23 billion. You can see shares up about 1% in the after hours.
We'll get back to Tesla in just a moment. Meantime, Las Vegas Sands out with numbers. We're seeing the stock higher 4.7% in the after hours. Third quarter adjusted EPS came in above estimates at 78 cents. Third quarter net revenue coming in above estimates at $3.33 billion. Once again, shares in the after hours higher by about 4.7%.
All right, let's go back to Tesla, folks, because we continue to monitor this one, and it's been bouncing around here just a little bit lower, down about 0.6% here in the aftermarket. We're looking at Tesla posting third quarter profit that fell short of Wall Street expectations despite record EV sales, a sign of the pressure automakers are facing from shifting federal policies and rising costs. Adjusted earnings were 50 cents per share in the period, the company said. Analysts had expected 54 cents on average, and estimates compiled by us. Revenue was $28.1 billion. But again, the stock, I agree that investors are trying to figure out this one, Romaine.
They're trying to figure it out, and I think it gets to this idea of a company at an inflection point. When we talk about the EV side of the business, of course, the loss of that U.S. tax credit, a big issue here, not only for Tesla, but for its peers as well. They mentioned that in the shareholder letter, particularly when it comes to lower regulatory credit revenue and lower, that have hurt their overall revenue, but also impacted the bottom line with regards to profitability. They also mentioned a few one-time costs there as well that also did weigh on profitability too. So this is a company that, of course, looking backwards, you can see a lot of the issues that they're having to grapple with. But the big question, particularly when we get to that conference call in less than an hour's time, is what is the future? Is this going to be a discussion about new vehicles, or is this going to be more discussion about autonomy and robotics?
Well, they're going to try to make it about AI, autonomy, and robotics. I'm looking at the 29-page Q3 quarterly update. The third paragraph in talks about how every Tesla vehicle delivered today is designed for autonomy. Every Tesla energy storage product is capable of being enhanced and optimized by our virtual power planner auto bidder functionality. We continue to deliver a fleet of products that brings AI into the real world as we pursue a future of sustainable abundance as outlined in our master plan.
All right, IBM crossing the Bloomberg terminal. Here's the red sticky, the number that jumps out. Third quarter revenue, folks, slight beat, $16.33 billion versus an estimate of $16.1 billion. Software, so key. Third quarter software revenue of $7.21 billion. That is smack in line with what the street was expecting. Also, some of the outlook sees fiscal year free cash flow of $14 billion, had seen above $13.5 billion. The estimate on the street is $13.48 billion. Consulting revenue, also important. Third quarter consulting revenue, $5.32 billion. And that, too, Katie, is coming in better than expected. A quick check on the stock in the aftermarket, and I'm pulling it up on my Bloomberg, and it is down 3.5%, Katie.
Interesting. I mean, this was another name, though, where expectations were high. And you can see year to date through the close up 33% on IBM shares. So this goes back to what we were talking about. Beat rates are high. We're getting positive results here. But the reaction to some of these earnings reports certainly has been in the opposite direction.
And we should point out the CEO of IBM was at the White House yesterday talking about investing in the United States. So we'll continue to monitor that.